The price of gold bullion rose Friday in London, marking its best week in 12, but lagging the fresh all-time highs in global stock markets after AI chipmaker Nvidia posted quarterly earnings even stronger than the tech stock darlings analysts expected. Accelerated computing and generative AI have hit the tipping point, claimed Nvidia founder and CEO Jensen Huang in Thursday's press release. Demand for artificial intelligence applications is surging worldwide across companies, industries, and nations. With Nvidia now trading over 236% higher from this time last year, information technology stocks in the US-listed S&P500 index have risen by 57.0% over the past 12 months. The rest of the index has added 17.7%. Added together, the Magnificent Seven, coined by celebrity stock picker Jim Cramer for Microsoft, Apple, Nvidia, Amazon, Alphabet, Facebook, and Tesla, opened Friday worth almost $13.5 trillion in total. That tops by more than $1 trillion the combined 2023 economic output of Germany, Japan, and India, the world's third through fifth largest GDPs, and it matches over 99% of the total value of every corporation listed on the Shanghai, Shenzhen, and Hong Kong stock markets in China, the world's second largest economy and number one export nation. The market cap of the Magnificent Seven also comes within 3% of the spot market value of all the gold ever mined in history, now estimated at a little over 212,000 tons. Steel mills worldwide turned out more than 199,000 tons every hour in January. Nvidia is the story everywhere, says strategist Nikki Shields at Swiss Precious Metals, refining and finance group MKS PAMP, comparing the AI chipmaker against natural resources stocks and finding that its market capitalization is now equal to 5 ExxonMobil's when net income of Nvidia is $30 billion versus XOM at $36 billion, 9 BHPs and 77 Barracks. Such super low sentiment in commodities is nothing new, with comparisons to mid-1990s, 2000 to 2002 and 2015 to 2019. But gold is also being wrapped up in the commodity-off sentiment, even though it's sitting just beneath all-time highs, and, fundamentally, physical demand remains insatiable, steady, and increasingly price-insensitive. Trading 1.5% higher from last Friday's closing price in London, gold bullion rose into today's afternoon benchmarking process, suggesting strong demand over supply in the first round of the auction and fixing above $2,027 per troy ounce. Silver prices, in contrast, lost 1.3% over the 5 sessions to Friday's noon benchmarking in London, reversing almost all of last week's 35-cent gain to stand $1 lower per ounce across 2024, so far at $22.70. So-called cryptocurrency Bitcoin, meantime, dropped 1.8% from last Friday. A surge of interest in Bitcoin exchange-traded funds is prompting some investors to swap out holdings in gold-backed ETFs, claims an article at Reuters. Giant gold-backed ETF. The Spider Gold Trust yesterday shrank in size for the 9th session in 15 so far in February, reaching a new 4.5-year low, needing less than 828 tons of bullion backing. The UK gold price in pounds per ounce today rose back above £1,600, while the Japanese yen price of gold set yet another new high, and the euro price of bullion edged close to 2-week highs at €1,879. Pushing back against big tech, with its new Digital Markets Act, DMA competition laws, from the 7th of March, the European Union, now targeting US tech giants, Google, Amazon, Meta, and Microsoft, together with Chinese-owned TikTok parent ByteDance, is expected to fine Apple €500 million for highlighting its own streaming music service over Swedish competitor Spotify on its mobile phone apps store. Alongside Nvidia's earnings results this week, UK-listed commercial bank and London bullion market maker Standard Chartered beat forecasts with an 18% rise in annual profits. But shares in HSBC fell hard after it reported a heavy write-down on its investment in a Chinese bank. Germany's Pfandbriefbank is meantime seeing serious credit stress, with its Tier 1 bonds trading at just 20 cents on the dollar amid a 62% stock crash driven by its exposure to US commercial real estate. Please like this video and subscribe to our channel.